when we think about what we've traded through this week, we've traded through a number of global PMIs, Purchasing Managing Index. We've got the manufacturing PMI in the U.S. We had the services PMI, ADP, FOMC minutes, and then finally Non Farm Payroll. So we've traded through a lot of major, really macro important data that affects inflation growth, monetary policy, and money supply, right? So we've gotten through this. And one of the things that I've been saying is that we're probably not going to see smooth sailing and at least calmer seas until next week. Another thing that we've been talking about in previous conversations has been there is a tendency, and let me just log in here and show you, there is a tendency for there to be a dip early in the month of January. I was going to say June. The month of January, there's a tendency to be an early dip in the month of, so where I'm talking tendency, I'm talking the last 5 years, 9 years. There's a tendency for a little bit of a dip in January. Again, tendencies are not trades. Seasonals are not setups. However, if we're sort of talking about what usually happens, there it is. Is this our opportunity? What's happening right now? That's my thinking, maybe. That little dip right there. And it's not just on the S&P. You can do the same thing on the NASDAQ. So we've talked about this in the last week or so and just said, hey, what kind of tendencies do we see? There's your little dip in the NAS as well, whether you look back 5 years, whether you look back 10 years. As we leave early January and go into mid-January, look at the tendency. We usually have pretty clear sailing till about mid-February. I'm not saying we just dive from there, but that seems to be that bullish window early in the year, seasonally, right? But we still need to confirm that with actual setups, with the actual technicals. So I'm still bullish. Where am I bullish? And how's that setting up for next week? I think we have an oversold NASDAQ. Step one, what's the structure? It's still chop. Step two, I'll go up to the price part of the chart. Previous support here. We haven't broken that in any significant way. In fact, we keep wicking it. Really, we trade down to it. Buy orders are there. That's why the wick is left behind, not the body of the candle. No different today. No different today. So then that's in check. And then we ask ourselves, well, this is the slow stow down here. And why are we using this? Like I mentioned, we're in chop. And we've stopped at this level before. There's your 20 level on the slow stochastic. By the way, here's your +1 standard deviation. We've stopped there a number of times. Here, and we're there right now on the V-score measuring volume. So I've got a number of different ways I'm confirming what I think is going to happen next. This is all about trading what you see, right? Not what you think. Not what you've heard, not what whatever chucklehead on television's talking about. We don't want to trade what we think. What a dangerous rabbit hole to go down. So this is the NASDAQ. Now, if the NASDAQ is sitting at an oversold support potentially, XLK, I actually think XLK is your relative outperformer here. But XLK is setting up a pattern that is something that I was taught many moons ago, is called a minor low. A lot of the patterns that I discuss are kind of old school, that the terminology isn't necessarily used as much, but it's a minor low. And what is it? It's a lower low surrounded, preceded by a higher low, and we need another higher low on Monday. In other words, if we break the support, the low of today's session, the pattern is no longer valid. So on Monday, we might get the confirmation of a minor low. We just need a candle that looks something like that. I don't care how low the low is, as long as it doesn't exceed today's low, right? That has to remain intact. And then we need to see, ideally, on Monday, price action take out today's high. That's how a minor low setup works, okay? I don't know if there's another name for this, but that's what the pattern looks like. That's what the pattern looks like. Old school pattern. I love old school things. That pattern's happening with all those other things in play, all right? And this is a choppy market, so yeah, you can kind of call this an oversold buy. Interestingly, notice that the support on the V-score, the support area, it's not perfect, but it doesn't care that the highs are not even. This isn't about a triple bottom, right? Volume prioritized indicators don't care that the price level is not sitting exactly at the same level, right? Exactly at the same price. It does not care. So, and by the way, really neither does the stochastic. So we keep those things in mind. All right, well then that opens the door to relative outperformers. You know, Apple, look, if I'm saying there's an oversold NASDAQ and there's possibly an oversold XLK, that then takes us into Apple. Apple's still in a trend. This is how relative outperformance works. This looks better than the NASDAQ. This looks better than XLK. In fact, this is heavily weighted within the XLK, and it's probably one of the better corners of it. Do you see how the futures take you to the sectors take you to the stocks? I always start at the futures. I'm a futures first trader. So this is the way that I'm looking at setups for next week. And there's a lot of sectors, obviously, that have my attention. This is probably the one, XLK, that has the broadest ramifications across the different indices, because the Dow, number 2 weighted sector is the XLK. The S&P, number 1 weighted sector is the XLK. So if you're looking for higher highs in the S&P and the Dow, sure, we're going to look at financials. Sure, we're going to look at healthcare, especially financials, because we're coming up on earnings season, right? You take a look at what's scheduled, going into next week. Start thinking about, am I logged in here? I think I am. You start thinking about where the financial releases are going to start to affect the XLF, which in turn affects the S&P. We're right there. So we could see some volatility. One of the reasons I'm focusing on tech is we won't be affected by financials volatility. So there's an advantage to knowing which indices are either lightly weighted or completely outside sort of the blast zone, if you will, of these high impact hot zones. All right, that's the way I'm looking at next week.
Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.